Hello everybody, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here for a Turnaround Tuesday Forex market analysis for you on March the 9th, 2021. Before we get into the webinar, we want to remind you that this is for illustrative and educational purposes only. So just take a look at that disclaimer, and if you haven't already done so, please subscribe to our YouTube and Twitch stations so you know when we're on live, and you can check out all our past videos. And also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions, written by yours truly. So, and we will have some high probable Japanese candlestick patterns that we will refer to in this video. Alright, we have the Forex-Trading-Unlocked.com website pulled up, and from our navigation tab we've already pulled up a workstation page. We're going to skip past the numbers. Big numbers to watch are going to be the oil numbers tomorrow, around 9:30, just before 9:30 Eastern time, 9:30 Central time, so that would be 10:30 Eastern time. So, what do we have going on here? Well, we have the Euro-Dollar chart pulled up, but let's put up the Dixie. Yesterday, the dollar index had a really nice blow-off high. Started off the week very, very strong. So, pressing new move highs, the trend is very strong. So, as a whole, the dollar index has been strong versus the broad base of currency crosses out there. So, let's go back to the Euro US dollar. This is the biggest component in the index. As you can see, this market is turning around today. If the market was to settle where it is at right now, this here would be a piercing line buy signal. This is if it was to settle around where it's at now. Potential piercing line buy signal forming. Keyword forming. It has not occurred yet. So we have to wait and see what's going to go on. So we don't have any targets or anything, but I would say that at the very least we'll probably see a challenge of $1.20 sometime in the next couple days to a week if we settle around where we're at or higher. So we're waiting for a signal. Now currently this market has been making lower move lows and lower move highs. So that means it is bearish in the short run on the daily and even on the weekly. However, today we are looking for a bounce. So will it be just a corrective swing like it was here back in February? Maybe. I think that what you're seeing here is, if you'll notice, the 30-year bonds, they are now, they have bounced off of a low from set yesterday or 2 days ago, and we have the bond market that is now starting to stabilize. I wouldn't say rally. We also have the gold market that this here is a potential bullish engulfing line buy signal that is forming. It hasn't formed yet because it's not completed. We have to see where the market closes. Remember, the U.S. stock market has only been open for a half an hour right now, so we have to see how the U.S. stocks react today. But oil is down today. Interest rates are also higher, meaning the interest rates are going down as far as rate-wise. Remember, there's an inverse relationship. These correlations are helping to turn the currencies. Remember, we've been talking now for weeks, actually since December, about how oil is impacting certain currencies. Not so much the euro, but it will be the pound when we get to it. So we're watching the euro US dollar, and we're waiting for a turn to be confirmed today. So now let's go to the British pound US dollar. This is the second biggest weight in the dollar index. Now this one bottomed already 2 days ago. Now I would be very leery of being a bear with the British pound, guys. If you're bearish the British pound, the only way I can see that this is going to happen is if we see a huge sell-off in oil. Right now we are just starting to see a little pause. So an irony of it all is oil is actually lower today, and we have the British pound rallying. That just shows you how strong the British pound is and correlated with the oil trade. So I think that but now we have been making lower move lows and lower move highs in the British pound on the daily. So right now, this is only viewed as an upside correction. The thing that confirms bullish strength for the British pound will be if we take out this high around $1.4023. anything above here, and this market is definitely going to be making a run for new move highs. Long term, especially if we see the oil market continue to rally, we're going to most likely see the British pound US dollar trading up back above 143 sometime over the next, like, probably I would say 3 to 4 weeks, literally not that long of a time. So key off of that lower move high, and of course the low from 2 sessions ago on Friday. This is definitely where you have to look at for any failure here, that this market will still be under pressure. How much? That's the difference between the other currencies, is that as long as oil is strong, and unless there is a big sell-off in oil, it's going to be hard to see a big sell-off in the British pound US dollar. So we're waiting for a signal here. We need a confirmation of the close today, and we'll have some upside targets for you. But right now we are bullish, looking for a test of this 140.23 resistance line. Anything above here would confirm new highs after a higher move low, a lower move low, and that would be what? Neutral at the very least, to short-term bullish on the hourly. US dollar CHF, let's see what's going on here. Like a balloon underwater, this one has been rallying very, very strong against, the dollar's been rallying very strong against the Swiss, unlike how it has been with the other currencies. They have not been as impacted by the dollar rally. This is saying something that you have to pay attention to also. Since the Swiss is a flight to quality currency, the oil trade and the interest rate trade are definitely driving this one. So this is going to be viewed as a potential short-term corrective slide, something like we had here back in February. I would not expect this to be a major, major change in trend for the US dollar Swiss overall. So right now we are looking at a potential bearish engulfing line forming here. So we're going to have this potential bearish engulfing line sell signal is forming. All right. So we have to wait until the close of today. We'll get the confirmation. So when we have our analysis for Wednesday's trading, we will already have these signals in place. So we will see what happens with this one. Should this market settle where it's at right now or lower today, then I would say a test of the 92, even down to around 91.5, is very likely in the next probably week and a half to 2.5, 3 weeks. So I wouldn't think that it's going to happen that radically. However, markets go out like they come in. So this has been a very vertical slope. So maybe we get a test of 92 even below there within the next few sessions, and then probably start to see it slowly even out a little bit before it gets back into the rally mode. US dollar JPY, this is another flight to quality currency that has, I wouldn't say run its course, but it's starting to run out of gas. Now, it did make a higher move high today, just like the Swiss did. So is it a rejection of higher move highs? No. If this has been very steep itself, to have a little decline for a week or so is not such a big deal. I would say this is going to be reminiscent of one of the 2 corrections that we had in February. It's overdue. We were looking to hit 107.5, 108.5 by sometime by the end of this week into next week, and we exploded through these levels over the past week and a half. So I would say, once again, markets go out like they come in. So not that it's going to turn into a bear, but for a bearish correction, it'd be very likely to see us test around 108 support, maybe down to 107.5. I highly doubt that you will get back down to this 106 even area. So we have to wait for, we have a short-term potential sell signal forming right now. We have to see how this market closes. This is oil reactionary as well. The fact that oil is down today is probably one of the reasons why you're seeing the profit taking in the US dollar yen. Do I think it's going to remain so? Probably not. I would key off of the oil numbers tomorrow that are once again going to be released around just before 9:30 Central Standard Time. That's 10:30 Eastern Time. So that would be only about around an hour after the U.S. stock market opens. So that would be something to really key off of. Should you see a very positive number, meaning that it's bearish oil, you'll probably see a follow-through trade where the US dollar or Japanese yen might spike through support pretty harshly come mid morning tomorrow. And that's also because of the thin trade in Japan, because by that time the Asian markets are closed, the European markets will be coming close to into their close, so it'll be all a U.S. trade. So we'll probably see a lot of volume, I would say, in the oil numbers as well as in the currencies as we get through tomorrow, from today's trading into and through tomorrow's trading as well. So we're waiting for a signal here. Once again, I would key off of this area. 106.64 is key support here. I don't think it's going to correct any further than that. We need to wait for the close today, and then we can figure out some price levels for you. Australian dollar, US dollar, this has been a major bull against the dollar for the past year, over the past year, in a slight correction to the downside right now. So the question is has it bottomed, and is it ready to make a huge run for highs? That's a good question, which is even a bigger question is, are we setting up for a shoulder here, a head here, and now we are potentially railing into a higher shoulder? I would use these lows here. This is key support. I would also watch the trend here using this as a neckline. Should we start to rally and then fail and then fall through 76.22, this would become a head and shoulders sell pattern. Is that going to happen? I don't know. We'll see. I think right now, with the fact that oil is down today and the bonds are up, and Australian dollar, just like the British pound, is getting a little rally against the dollar, we're having profit taking against the dollar right now, and the oil trade is definitely still supporting these. So let's see what kind of a rally we do or do not get out of this. I think this is a short-lived bounce. I would kind of look at it like this. You had a lot of resistance around this area. You can see how it even became resistance here. We pierced it, fell right through it. We tried to get back above it, and then we failed. So I think 78.21 is probably going to be your buffer right now for the Australian dollar, US dollar. We'll see what happens with that trade. But right now, we are keying off of these levels. If you look at the low here, it was 76.21. Here it was 76.21.5. It was just slightly higher. So we have a higher move low. I know it's almost the same price point, but it is a higher move low after having had a lower move low and a lower move high on the hourly basis. So the Australian dollar, US dollar, although it is not as bearish as it was before, it is not necessarily bullish. We're looking at more as a profit-taking move that probably will have this lift up over the next course of the rest of the week into next week. Look for a challenge of 78.21, especially if oil starts to rise again in price. It's very likely that you will see the Australian dollar, US dollar make a challenge of this resistance line. And then, if, like I said, if we somehow do get a major sell-off in oil, that would change gears a little bit and set us up for having a head and shoulders here. Then we'll finally get us to get a nice little correction on the Australian dollar, US dollar. Remember, this has been railing for over a year versus the dollar. New Zealand dollar, US dollar is pretty much in a similar situation. This one here has not made a lower move low over the past couple days. So it did make a lower move low on Friday. It's pretty neutral right now. I would say this is not so much a head and shoulders as it is a big holding pattern. It may actually be something where we're going to start to set a range somewhere between here and here, and see this market start to just basically swing between 73.19 and 70.20 for quite some time. Especially if we do see oil start to plateau, not necessarily fall apart or continue its rally. If it just goes into a holding pattern, you're most likely going to see the same with these currencies as well. US dollar, Mexican peso, this one's been on a little bit of a tear, but hey, look at what we have here. We have a short-term sell signal right in front of spring break happening here. I would say that this is probably going to be just a short-term correction, something like we had in February. Nothing that is going to really have an end result. It's going to be very extreme. I think you can use 20.5 pesos around here as your baseline. I do not see the market falling below that. at least to maintain this short-term trend. I don't see it being excessively bullish either, but I do think we have a good chance of getting back above 21.50 pesos to the dollar, and we get a challenge of around 22 to just above 22 pesos to the dollar sometime over the next 3 to 4 weeks. Then I think you'll probably start to establish a range trade, with this 20.5 being a very good baseline, I think, for the US dollar Mexican peso moving forward for the next couple of months. The US dollar Canada, this is another one that's been a raging bear. So like the Australian dollar and the pound and New Zealand dollar, oil is definitely driving this trade. Remember, we had made a bottom here. We had a buy signal. We hit our short-term targets right within a day. We have been trading sideways here. This is key, this level right here. If we can pierce this, this would be a higher move high after a higher move low. But right now we are just in limbo. So we are keying off of this higher move low and this lower move high, because this right now has us in neutral. Remember, we had made a lower move low, we made a lower move high, and then we made a higher move low here a couple of days ago, last week. We've held this ground. If we fail today, which right now it's pretty bearish, it's flirting with this. If it fails here today, then we are looking to continue to hammer support. Remember, this trend is bearish. We have not seen any major buy signal. This was a counter trend buy signal that lasted a day here, and now has set us up to neutral. This is not bullish. We're not looking. This may not even be basing. This could be just a long-term sideways pause before this trend continues to press through support and go lower. As far as basing, if oil has a sell-off, then maybe we'll start to see that happen. But I think oil is going to continue to rally. I'm looking for $100 a barrel by sometime between the summer and the fall. At the rate it's going, it's going to be there by Memorial Day. But I'm looking more at like July 4th. But we'll see. Should that arise, this trend is going to most likely still be heading lower. But if we see a failure of swing in the oil markets, especially get some numbers that help to sell it off tomorrow and over the next week or two. I mean, if we could get a $5 to $10 sell-off in oil, I think you get a big rally in the US dollar Canada. There's only one problem with that, is that oil now has a price floor of somewhere between $30 and almost $40 a barrel just for production and transportation, because of the new rules that were imposed at the end of January in the U.S. So that means that how far is oil going to really slide? Not much. It's probably more likely going to rally a lot more and then come back to base around where it's at right now. So we'll be keying off of those different variables. We don't have a signal here. It's a neutral trade. Nothing to do with the Canada right now. Don't try and force the trade. Okay, so once again, we're going to end where we started. The euro US dollar potential piercing line buy signal is forming. We will see how this shapes out over the next couple hours, and we'll see what happens. So right now we're just waiting for it to happen. When the market closes, we will have confirmation of these signals. Remember, we have signals in the euro, the Swiss, potentially in the yen. So we'll have a lot of interesting things to discuss later on. So if you want to learn how to trade these high probable Japanese candlestick patterns, read the book High Probable Japanese Candlestick Patterns, which is available on Amazon.com in paperback and Kindle versions. Thanks a lot, and we will see you soon. And don't forget to subscribe to our YouTube and Twitch channels, Forex Trading Unlocked.